Time now for the markets with Leighton and some record high prices for cattle this month.
That's right, Amy, but some are wondering if the fundamentals of the market can really justify those high prices. Also ahead this week, U.S. catfish processing remains down. Cotton prices remain under pressure, and new crop soybean prices gain support from exports as well as some other factors. Catfish processing is still down, but not quite as much as previous months. The industry snapshot for January was released on Tuesday of this week. It shows the average pond bank price being paid to U.S. producers as the new year began was $1.25 per pound. That is 31 cents per pound higher than 1 year ago. Farm sales totaled well over 25.5 million pounds round weight, a decrease of 26% from January 2011. Processor sales were just over 13 million pounds, also down 26%. Extension Ag economist Dr. John Michael Riley has been looking over that new report as well as numbers on the U.S. catfish supply situation. He joined me Thursday morning to answer further questions about the aquaculture sector and where it may be headed. So, John Michael, it's pretty much more of the same as we look at these new numbers?
It is. We've talked in the past when we talk about catfish for a little bit of period there, contraction across the industry. Past year or two, we've seen the contraction slow to more of a drip as opposed to a gush. Water acres are pretty steady across Mississippi and really across most of the southeast. The same is kind of true as you look at production numbers, although these production numbers are continuing to fall, not near at the rate that we once were at. But the general consensus is that as a result of high feed prices, of lackluster pond bank prices for the catfish, that the supply of these of total fish available has decreased, is continuing to slowly decrease, and as a result, farm prices have been bumped up. Although the price at the processor door for the fish has started to come down just a little bit. It's fallen a few cents per month ever since September. But the general story is that prices are higher, but they need to be higher as a result of the higher input cost.
How is demand shaping up? As we've talked before here, the prices that restaurants have to pay to have the fish for their seafood buffets or whatever is obviously more now. How is demand? Are restaurants still putting the money out there?
Well, if you look at shipments, or if you look at process totals, they're falling as a result of less fish. But in terms of the amount that's being bought by restaurants, I think that's remained steady. One of the bright spots has been exports. Exports were up about 150% if you look across 2011, which is very strong for the industry, and largely due to weakness in our U.S. dollar. So it made all of our products cheaper, and catfish is another one of our ag commodities that took advantage of that. Mm-hmm. So I think demand, is one of those fickle things, especially for catfish, because it's not as widely accepted in terms of the general public. But for the most part, especially in places like Mississippi and the southeast, where catfish is very endeared, demand has remained steady, if not even in the light of higher prices.
So kind of summing all this up, it appears that producers will be able to continue to see prices at the pond bank about where they are right now.
I think the robust growth has started to slow down, and we're probably going to continue to see steady prices, but that should be expected.
From fish to cattle now, where rebuilding the herd is a common point of discussion in the markets. Analyst Naomi Bloom recently points to some recent numbers to explain why she thinks the current positive market trend will continue this year.
The one surprise in the USDA report and the inventory report was that they increased heifers being held back for breeding by 1.4%. So what that means is that for the short term, the next year, there's not going to be a lot of supply for the marketplace for beef, but they are trying to rebuild the herd, and that's going to be coming up 2 years down the road. But in the meantime, that beef price is going to stay high. It's been high. It's going in at the retail sector. The price is up, and the choice value is up about 10% from a year ago. The select price is up 8% about a year ago, and that probably is going to continue on that path.
Our trivia quiz marks the transition point in the markets, and here's the subject for this week. What country purchased the most gallons of U.S. ethanol in 2011? The answer is one of these: Brazil, Canada, the Netherlands, or Great Britain. I'll tell you the right choice in a few more minutes. What was left of an empty plywood mill currently being dismantled in southwest Mississippi burned earlier this month. The plant in Gloucester had been closed since 2009. It was operated by Georgia Pacific. The fire reportedly began not long after salvage workers had left the site for the day. The blaze is still under investigation. Cotton futures tumbled this week as forecast of a further increase in world stocks weigh on the market. Analysts at DTN say the problem continues to be production exceeding mill use. Another negative factor for prices comes out of China this week. The government there is about to end its purchases of domestic cotton for strategic reserves. That happens on March 1st. Well, corn is poised to grab more U.S. acres from soybeans this year. This according to analysts with the CME Group. However, beans have climbed to 4-month highs, and there is some lingering uncertainty about South American soybean production in the marketplace. Analyst Virgil Robinson had these comments for Market to Market's Mark Pearson on what could be ahead for the soybean sector.
I think there's something of an acreage battle looming, particularly with the recent change in the new crop soybean, new crop corn price ratio. So old crop beans, Mark, if I had any, I don't have any. If I had any, I would be patient if my balance sheet permitted that,
right, yep.
and sustain that inventory moving forward for at least a while longer. Minimum price comes to mind with respect and/or insurance programs with the new.
Time to backtrack now to our trivia quiz and conclude this segment of Farm Week. The top foreign customer for U.S. ethanol last year was Brazil, to the tune of over 395 million gallons. So A is the correct answer.